Now it's the time for the panel. We have a wealth management panel here. So it is high net worth families and their wealth planning structures, goals, challenges and solutions. Welcome to all the esteemed panelists.
Hi, good evening friends. I am Vinnie Agarwal. Let me just start with a brief introduction and then we can move forward on this. I am a private banker by profession for last almost 2 decades now. Started my career with client associates, moved to Morgan Stanley, then Stanchart, then Centrum. And for last 4 years, I have incubated a venture for myself where I am actively advising clients to retrieve their lost financial assets, something very close to what Mr. Jain just shared. So I do it day in, day out, and I can understand the gravity of the topic. Thank you.
Hello. Yeah, hi. My name is Rohit Bhardwaj. So I represent a Swiss company known as Henley and Partners. We are basically into a very interesting service proposition catering to high net worth, ultra high net worth families and individuals, which is basically investment migration. And this topic has now created a lot of interest among these families, specifically post-COVID. So investment migration essentially means providing residence by investment or citizenship by investment opportunities. So this firm has been in this kind of domain. We call it an investment migration industry since last 30 years. And I lead the India business. Before that, I've started my career with a wealth kind of a firm, moving to a bank, and then looking at certain IT solutions, and now taking care of Henley and Partners India office since last 3.5, 4 years.
Yeah, hello. Good evening. I'm Munish Sabharwal. I'm heading North for SBI Mutual Funds. So I'm in touch with these types of people, financial planners like Amit, and the service provider like client associate, and with the treasuries and their family offices to understand their need, and probably we manufacture the product as per the need of the investor and our client base. Thank you.
Hi, hello everyone. My name is Amit Kukreja. I'm based in Gurgaon. Family wealth advisor. I do financial planning and investments management, including execution. And my niche is fee-only practice, which means I do not earn anything from commissions. I charge a fee. It's a financial consulting, financial coaching proposal that I do for my clients. And it's obviously invoiceable for the effort that we are doing for them. So I've been in this for last 13 years now. And this is my second career. I was in IT before for almost 15 years. That's about me.
Thank you. Thanks a lot. So, hello. So this session is basically about ultra high net individuals and HNI clients, challenges and opportunities. So all of you sitting in this room want to cater to HNI clients and ultra HNI clients, move your business to the next level. And we in this panel will be discussing basically ways and means by which you can reach there, because these are individuals who are actually catering to those segments of the strata today. So my first question, which is open to all of you, is how would you define an HNI or an ultra HNI? What is the basis of definition apart from the disposable wealth which they have?
I think there is no straight line method to define an HNI. One may say that somebody who has $1 million could be an HNI. Somebody may say somebody who has $500,000. Somebody may say 25 crores. And the numbers can go on and on for different people, different classifications. Even institutions don't have. So I think there is no straight line when it comes to private banking. Nothing is straight lines. You have to really customize for it for your clients. That's how I would look at it.
Anybody else?
I just wanted to add one point. Yeah. So post-COVID, if you're dealing with different type of families, so there has been in certain cases, maybe you're seeing a rise of disposable incomes, depending upon which industry they are working on or they're having the businesses. So, you know, it's becoming more also important and relative to cater to such families with providing different alternative products and solutions which might be more, you know, relevant in their financial situation, but also more relevant in their personal situation. So I think wealth experts, as Vinny also said, that it's, definition is very difficult. Every institution advisor might have a different thought process of a definition. But I see, because I deal on the whole ecosystem, ranging from advisors, people like Amit, institutions, multi-client family offices of wealth management, that it's very becoming more relevant that each advisor has to look, as a proper balance sheet or a proper personal financial planning aspects to advise on different solutions, not just for themselves, but for betterment of their future generations as well.
It's very simple. When you have more than what you need, you are wealthy. As simple as that. If you need 50 lakhs, you have a crore, you will naturally get the perception of wealthy. If you need 500 crores to start a business and you have only 200 crores, you wouldn't feel wealthy. If your child needs 5 crores for bachelor's and master's education and you have 10 crores, you will feel wealthy. If you have 1 crore when your need is 5 crores, you won't feel wealthy. So it's very subjective. The perception is derived from the facts. I know people who during COVID, they accumulated wealth because they had tech stock investments in the US. And they also went for a baby in their 40s, late 40s, because they had the time, because that was something that they have been passionate about, but they were not able to do it for whatever biological reasons, but they ended up one having. What happened? They had 10 crores of surplus and they said, we want to keep aside 5 crores for his education. And they suddenly started feeling the stress that we don't have enough. And just before the baby, they said, we have hung in our boots, we're going to go live in Goa. We don't need extra money, just manage this 10 crores. And now they were saying that I need to earn 5 more crores because the 5 of my 10 is earmarked for my son's education, who was born just 18 months ago. So it's a perception, what you need and what you have. If you have much more than what you need, you are wealthy. If you have lesser than what you need, you're not wealthy. The needs keep changing because as times elapse, as circumstances change, your needs also keeps changing. So very subjective, but I don't think there are any hard numbers that say this is HNI or super HNI. I just think the surplus that you have in the best possible way you're managing is only thing that makes you rich, that makes you wealthy, if that helps.
If we look into the regulations, the minimum ticket size for AIF is 1 crore. So if we have a 10% of that money, we can to a one asset class to a AIF. So minimum 10 crore is a threshold limit, we can say. But otherwise, if we in a philosophical, we have to say, there is a one shire, he has specifically tell that fitur hota hai har umr ka juda, khilone, mashuka, rutba or khuda. So probably the people who are in the stage of giving the money back to the society, those are the people we called ultra HNIs, and they plan for it. That is, I think that the one what the definition can be of the ultra HNI people.
Great, great. So one question which I often get from advisors and especially is, there's a client with a say investor surplus of 5 crore rupees vis-a-vis a client of 50 crore rupees. What changes? What is the change in mindset, requirements, which a person at 5 crore would not visualize and person at 50 crore would start visualizing and requiring?
So I think it's about the understanding of the ecosystem, very importantly. Somebody who has a 5 crore may not have an aspiration to have an asset overseas, right? So it's about the understanding and the need. And second, their current lifestyle, their current aspirations. That's all what you need to know to have a good financial plan for the gentleman that who is looking at. Whether it is 5 crore, 50 crores, 500 crores, doesn't matter. It's all about his particular need. If you are talking to a twins at the age of 40, running a same business, but may have a very different aspirations. So a different plan altogether. Maybe a couple, running same business, very different. If you sit with them individually, they'll have very different thought processes. One may be thinking of business expansion, the other may be thinking of kids. Could be other way around.
Anybody want?
I'll just add one point. So I'm just coming from Bangalore. So last 2 days I sat with different type of advisors. So one of their clients has just got that ESOP buyback suddenly from that, that particular technology gaming company. And they say that now this is something is very important for our child education. And, we need to now build a corpus. And this is something what Vinny is saying that, the aspirations and passions about offshore also comes into the limelight. So we were having a discussions about, okay, we want to do a certain residence by investment option known as a Portugal or a Greece in Europe, lifestyle aspirations. They understand that if the children go ahead, they want to protect their wealth preservation, but having also that situation where kids might not come back, right? In a second case, we saw that a particular business, a trader, is basically in a liquidation event, and from there, I was sitting with another gentleman who were creating their estate planning and succession planning, but also they want the kids to go to US, and that discussion came where, okay, there's a specific program like a US EB5 and the Canadian startup. That is something they want to do that for their particular daughter, so that daughter does not get hassled. So these type of instances do come across from a certain HNI, ultra HNI client community.
Actually, need is a individual specific actually. Because some of the times you go with the one mindset when you're meeting with the client. Suppose one A product, we have to put it in the investor's kitty. I just share you one example. I met with a investor who has sold his business for around 500 crore. So, I discussed with him the various investment options with our company. So he said, I have already make up a plan because he was a 75-year of age. So his son is already settled in US. He told that his children are not requiring this money. So as a financial planner, so at that moment of time, the person with a 75-year of age, we recommend that he want a wealth preservation type of money. So let's say I have a make-up mind, so I will want to invest in a startups. So I asked him, why you want to invest in a startups? Say with that money, probably there will be 100, 200 families and that will be able to survive with if I invest in a startup, or some of them then contribute for the growth of the country as such. So the mindset of the HNIs, that is totally different. We have to understand their mindset and then probably have to plan it instead of looking into the product and then giving them the solution.
Yeah, it's a good question, Deepak. What changes from when you own 5 crores to when you own 50 crores, right? That was the question, right? So my observation in last 13 years with people who have money is that if you have a very clear perception about what money is, how is money creating fulfillment and joy for you, then 5 crore to 50 crore journey is a fantastic journey. The guy will be on cloud 9, the guy will make sure that the 50 crores is giving the best bang on the investment, that whatever he's choosing to do. But if you have a perception that money is something we just need to accumulate and keep it for ourselves, then most likely the person will continue to be unhappy even at the stage of 500 crores if he takes it from 50 crores. Normally, people who have realized that money is a resource, it's not a destination. Money is a fuel in the car, it will help you go to places, will have a lot more fulfilling experience with money. So what changes is your capacity to add more value in your own life. From 5 crore to 50 crore, what can you all do with this 50 crore? If you have that clarity in your head, then you can be very happy, joyful, growth-centric, and absolutely financial free with respect to your actions. But if you do not have that clarity in your mind that what money can do for you, and you're only here to hoard and accumulate, then you're likely to be very unhappy. So we call this money mindset and money psychology. So your own relationship with money, as you have grown as an individual from your childhood, your own experiences with money, your own conversations with money, your own observations about money with respect to what your parents did, what your siblings did as you were growing up. Those experiences, those conversations, those observations translate into your own money script in your head. And that is what will determine your money behavior all your life. So if you're conscious of that money script that you have and how flexible you are to change that, you can definitely change the value extraction from the money that you have, whether it is 5 crores or 50 crores or 500 crores. And it is normally observed through research that the more you make this money work for you and society, the higher will be your satisfaction, fulfillment and joy. The lesser you make this money work for other people and individual in the society, the lesser will be the satisfaction, joy and fulfillment from your money. So my suggestion would be to have a very clear script. If you had 500 crores today or 50 crores today, what would you do with that money that will help you elevate your satisfaction levels and joy? That's my take on this.
So there is a general perception that as money increases, our focus shifts from enhancement to protection of money. And also at certain level, you start thinking of giving back to society. Is it true or?
So I'll tell you, it just reminded me one of my clients, and probably I would have dealt with him about 15 years back, and when Amiz was selling and what you rightly asked. He was almost 86 when I was meeting with him then. And his only passion was stock market. He used to come to his office, he was listed entity promoter, come to his office by 10, and till about 3 o'clock, his CNBC was open and he was just looking at it. And I was in my early days of my career, so I went and told him, sir, as per my understanding, you should be conservative. Why are you putting so much of money there? So he said, Vinny, sit, and I'll tell you. Today, what am I getting from this company on an annual basis? I have everything, house, car, best of the best cars, house, money in my bank account. And whatever I am getting, I am not able to consume that also. Now, whatever is left for my future generation, my son, my grandson and all. Now, what should I be doing? I love watching TV. I love stock market. Even if the money that the corpus I have there, it becomes technically, theoretically zero tomorrow, which means the stock market goes to zero. Will it impact my lifestyle? The answer was no. So at 86, if I ask probably the audience here, if not more, probably 60% of you would have told that he should be conservative. He should be conserving his capital. But he was completely the other way around, and he was right. So it's about the perception of the guy, how he wants to see his asset grow, what he wants to do with it. If he wants to do philanthropy, why not? He can write a check and give it. I know somebody who did that. There's a classic story where he was staying for 32 years in one of the rooms, 901 in Taj Mansingh. You can go and do Google of it. And he was one of the multi-billionaires. I would not take the name. And when he wrote, he made a state of about 500 crores as philanthropy, a trust. So it's all about the asset owner's perception, how he wants to see it.
Okay, so one question which is very pertinent to the crowd sitting here, how can they shift or start catering to HNI and ultra HNI clients? So what should be the change in the intermediary when it comes to going to a HNI or ultra HNI client?
Happy to share. So your question is, if we were to manage, what should shift in our...
Suppose a mutual fund distributor with a AUM is 10 crores.
Yeah.
Wants to go to a guy with a corpus of 10 crore rupees.
Yeah.
So what needs to change?
Very simple. You have to, very simple, and I'll tell you this works. You have to start thinking like him. You really have to start taking interest in things that he might be doing, because you don't know him well. What kind of car he is driving. How many times you have done a conversation about the car that the client is having? How many times you have done the conversation about the phone that the client is having, or a laptop, or interiors that he has all about, without judging the person. You shouldn't be judgmental about this, and you shouldn't be holier than thou representative either. So start picking up conversations, make notes about the objects they have, about the family members they think about, they talk about, and they love to care for. If you start making notes about their children, what they're doing now. And if you're seeing them 6 months later or 9 months later, even if he is not your client yet, so how is Aditya doing? So how is Myra doing? And you last time mentioned that she's doing a special training program in this. How did it go? What were the learnings? What is she doing now? Is she taking it to the next level or she's changing gears? So start taking lot of interest in a non-intrusive way, right? Not unnecessarily curious, only if the client is willing to share. I think it really builds your base. The things that they are, the possessions, the materialistic possessions they have, the lives that their children are living, the house that they're living in, the locality that they're living in. Definitely avoid negative conversations. And you know, when I say negative, what do you mean? Being critical about things. Being political in your conversations. Taking a stance on something which can lead to emotional volatility in anybody's head. Right? So if you do conversations about peace, if you do conversations about creation or co-creation with the client, if you do conversations about what they're doing to create a better world through their children or through their businesses, these conversations can pay off. Trust me, they will pay off eventually, 6 months, 9 months, 12 months, because they will start thinking that the guy is making right topics, he's bringing up right topics for discussions, and that is also helping me grow because I can now do more sensible thinking, my thoughts are getting more refined. So do those conversations. Of course, he should be open to doing those conversations. I think that is one fundamental thing. I do these conversations with my prospects without attaching strings to it, which means he may get converted to my client, he may not get converted to my client, but having these conversations, just sharing your interesting insight and asking, being curious to know more about them and understanding what they're here about, what they're here to do all about, what they're trying to do with their children. I think these conversations help a lot. That's my view.
I want to add another one layer, that is a collaborative mindset. That is very, very important, because as a mutual fund distributor, we are restricted to mutual funds or PMS or AIFs only. But the needs of the HNI, ultra HNI, that is beyond that. He want a tax advice also. He want you exiting from, suppose he want to sell all the assets in India and want to set up their base in other tax haven like in UAE or Singapore. So what should be the strategy? So probably we are not able to advise them on these strategies. So we should have a collaborative mindset, so we are able to work with those types of people so that we are able to fulfill the need of our customer in every aspect. We cannot provide all these services in-house, that because we have to understand our limitations. So we should have a collaborative mindset where we can work with the estate planners, where we work with the tax planners, where we work with the people who are providing the services in the foreign equities. That collaborative mindset will definitely help us in building the client for a longer term.
So I just wanted to add one point, wearing my ex-financial planning and other hats. So I used to inspire a particular gentleman, a very large distributor in Pune. He used to say, Rohit, trust is equal to a referral. If I build my close trust, if I'm able to help any way possible, apart from my conversations. So this gentleman never had any conversation about money with his client. And the SIP used to flow in because he used to tell, and the way they used to do is that he used to always talk about the psychological money behavior. He will never onboard a client. He used to always ask कि आप अपनी wife को लेके आइए. So he used to do 2-3 sessions. And then talk about really what, and there, most of these scenarios, most of the time the spouses were not in the same tangent what they expect about the financial discipline or goal-based financial. And then after those sessions, then they used to talk about creating a goal of, buying a car, child education, post-graduation, everything. And in that particular distributor's business, 80% of his client acquisition was not direct. It was all his existing clients' referral. So that is something which I've seen. I just wanted to share one example with all the people out here.
So I feel it's all about
see, there is a lot of vacuum when you go. You may think that you are managing 10 crores and somebody who individually has a 10 crore would be a big man, very well read, very well traveled. But sometimes it so happens that this is just your own mindset. When you go and meet with the gentleman or the lady there could be a lot of vacuum. So my first suggestion to you guys would be just walk up to the guy. If you get an opportunity, just go, walk to them, talk to them. You will realize a lot of things which are there that you guys are doing much better than they would know. They are experts in their own field. One of the meetings that I did with one of a techie way back, some 13 years back, and I cannot forget, I was sitting in an MIG flat. He didn't even had a furniture proper. And he sold off his company for almost about, there were 4 partners, for almost about 600 crores then. And that's why I was going and talking to him that time. He is one of the key architects today with Government of India on one of the very large projects. But that's how the understanding is. We may think that he is superhuman, but that could not be the case. So just go and approach the guys at least.
My next question is to Rohit. Question is, global trends like sustainability, going green, money going out, all of this is happening in India. And you are part of a company which has some stake into this. So what are you seeing when it comes to HNI, Ultra HNI? What are the trends? What are the options? And where do you see this going maybe after 10 years?
So that's a good question, Deepak. So I basically, cater to a particular part of the topic, but generally what we're seeing is a lot of HNI families, they want to basically expand their global portfolio. They're looking at more of wealth diversification. Also, the other trigger points is that, of course, all these HNIs understand India will be poised for a growth and they don't want to leave the wealth creation aspect. But having said that, whether the factors can range from personal to business like children's education or global mobility, they want to have a piece of the global investor pie. So whether through certain different products or through offshore opportunities, they want to expand their wealth. So that's number one. Number two, also a lot of these HNIs who have already taken a kind of exposure to some kind of offshore investment, they are now looking at more preserving and protecting that wealth. And this is where the topic of succession planning, estate planning, discussion, like questions like what does that will, where I want to look at that investment, cater to that, will that protect, what are the tax implications on the family or the business to a certain aspect. In our business, what we've seen a tremendous surge, more than 3 digits percentage post-COVID. What had happened was, in our line of business, people used to be only aware. So when I say people, these are only Indian domiciled families right now I'm talking about. Certain promoters or certain business owners or certain entrepreneurs might look at these options to form travel or their children or wealth preservation, which can range from, and historically the US EB5 program or the Canadian startup or some similar solutions usually used to be on the back of the mind because of sending the kids abroad for education. But now what had happened was, post-COVID, all of us were sitting at home, specifically in 2020 watching Netflix. Most of the people realizing the fear psychosis came into the picture, and a lot of these families thought that at least we should start preparing, having an insurance policy to hedge our sovereign risk. So then offshore planning also started coming in, combining with domicile diversification. That I can't leave India. I have my businesses, I'm working in a very high profile, or I'm a successful entrepreneur now, but I need something which gives me an access to fulfill certain business or personal objectives. So in our business of investment migration, we've seen 3-digit percentage demand since last 3 years. And now our business line has become more of a topic of a conversation within such high net worth individuals networks. But there is another aspect. A lot of influent investors, right, are also looking at different opportunities where they want to also tap, depending upon their working, or exploring more investors, whether it's in the US market or in general. We are starting now getting those affluent investors' demand, because in the last 3 years, depending upon their industry or what they've been working, they have now garnered that liquidity or that particular, and they want to park that investment and divide the investment within India and outside India from a hedging and a volatility asset as well. Thank you.
Thanks. So, by this we'll end the panel, and we are open to questions, because I would like to have some questions from the. So, there any questions, we'd love to take those questions.
Hi. So I'm not sure if it is relevant, but there are platforms like Robo advisory solutions, companies like Wealthfront and Betterment in the US. So they are kind of providing those kind of solutions. I'm just curious to know your view on this. Like, what do you think? What kind of scope it has in India? And can regular clients, not HNI clients maybe, but can regular clients be, kind of catered with these kind of solutions?
What do you think?
I'll be very happy to answer this, share my perspective, because I was a technologist for 15 years. And my realization is that there is a segment of people which is DIY. They want to do their own investments planning, and they will use these platforms. But there is a segment of people where either because they do not have the bandwidth to manage this, or they do not have the skill set, or they do not think this is going to add value. So they will hire human advisor. And human advisor brings in a lot of subjectivity. He brings in a lot of breadth of topics that the investment should be related. Financial psychology, money mindset, these are equally important subjects that will determine your relationship with money. So if you are really a mature individual, where you want to go deeper into your own relationship with money and also ensure that the money is working for you, you will end up picking a human element in your wealth management process. But if you are a career beginner, or if you are a person who has a very well-defined goal, ki shadi karni hai, gaadi leni hai, and until the first child arrives, I don't need any serious planning, very likely you will choose a robo advisory. And it seems to be working very well. Look at ET Money, look at Kukreja. I mean, these platforms are really helping people who are at the early stages in their career to accumulate money. So as long as there is clarity of what you want to accumulate in terms of corpus, and you are clear that I don't want any fancy products, I just want simple index funds, HDFC Sensex Index or UTI Nifty Index, nothing else, and you have done the basic fundamental study of how index has grown in last 10-15 years, a lot of people are doing simple index-based investing through platforms, and it's working out very well. I personally believe there is no competition for you. It's a myth. So you can really add value doing what you want to do. Even if you're not able to do, don't look at competition. We are 140 crore people. Trust me, you just have to find a good set of 50, 60, 100, 200 clients who need human advisor. And that will transform your journey. It's not that difficult. It's all here. It's not that difficult. And there are people around. And robo advisory is not a competition to you at all, if you're thinking along those lines. But robo advisory is going to happen. It will go up. It will go 10x in next 5 years. So you can't stop that force.
It's rather opposite. I have actually developed robo advisory solution. So that's what I'm asking. I have rather developed robo advisory solution.
Yeah, and I'm sure you must be doing really well.
I've not started yet. App is kind of getting ready, maybe in a month or so. But then I just wanted to understand your view on this.
I can guarantee you'll do very well.
Sure. Thanks a lot.
It's working out.
Yeah. Okay. Thank you very much. Thanks a lot.
Thank you, everyone. Thank you to all the esteemed panelists for such an engaging panel discussion. I request our esteemed panelists to please play this game once you're home. It is specially curated at AAFM when the entire team played this game.